Good morning, folks, and welcome to your market report. We're going to get right into it and get started. First thing we're going to start out with is the biggest mover and shaker today. So listen, we're glad to have you guys here. Today is Tuesday, July 31st, 2018, and let's start opening the charts right here. First thing we're going to take a look at is the biggest mover in the markets today, which is Bitcoin. Bitcoin's falling. Of course, now, we had some awful big moves in silver, too, but we're going to get right to them in a minute. First thing we're going to talk about is, well, Bitcoin's crashing right now. Right now. Look at this big red candle coming right this second while we're talking. I love it. It might be presenting a buying opportunity for us. Now, you got to realize that what you should be doing right now is you should be buying little dabs of Bitcoin as the Bitcoin price is falling. And continue to buy it all the way down to the bottom. Try to hit the lowest low spots that you can hit to buy in, little dabs, all the way down to the bottom. And then as the price starts to rise back up the other side, continue to buy until it gets too pricey for you. That's what you should be doing. And in this bear market. And ride it all the way down and hope that it'll go down to nothing. Hope the price of Bitcoin will go down to a penny a Bitcoin. And we'll buy them all up at a penny a piece, as many as we can buy. Let's hope for that. That ain't going to happen in our wildest dreams. But we can dream, can't we? So when we see these big red candles coming, I mean, we're overjoyed because this is giving us our buying opportunities. Come on, red candles, grow, bigger, bigger, bigger. We're not hoping for the Bitcoin price to go up just yet. We're hoping for to stay in a bear market until we can get satisfied and get as many as we want or as many as we need, which is all of them. And then we'll go back into the bull market, and we're all going to do fantastically well. Okay? Okay, so now let's take a look at cryptocurrency market capitalizations. Here we are. Cryptocurrency market capitalizations. And we're looking at roughly today, we're looking at $279 billion market cap. Bitcoin dominance at 48.2%. We see a fantastic buy on EOS today. EOS is down over 10% today, which is really, really good. Also, Stellar's down over 8%, which is really good. Cardano's down 9.78%, which is really good. You got to take a look at those coins and take a look at roughly 10% across the board as a buying opportunity for those coins. Litecoin is down 6.52%, which is really good. You know, you're only going to get so many opportunities now to buy in to these cryptocurrencies, and that's going to be over. Now let's take a look at the silver price today. Silver did an awful up and down, like a wham down. It went all the way down to $15.33, I think it was, and now it got this arrow shot straight back up again to $15.50. This is quite a large move up and down in the silver market. Maybe they were trying to smash it and it bounced back in their face. I'm not exactly sure what's happening here, but that's quite a large flash crash, and then the price went up really quickly after that, all the way back up, far higher than it was before they started. So I'm keeping our eye on these markets. Let's see if they did the same thing with gold real quick. Let's take a look at the gold chart. Yeah, exactly the same move in gold. See how silver and gold follow each other in the marketplace? This is why silver is the Achilles heel of the financial system, of the world's financial system, because it's the smallest, tightest physical market of all the physical markets. And it's the most vulnerable because the price is so cheap. Simply put, a billionaire, one billionaire could come in and clean out the physical silver market of the world. He could corner the market on physical silver, a billionaire could. A guy like Donald Trump, he claims to have $9 billion. $9 billion would do it, boys. Could clean out the whole world's physical silver market. And it surprises me that some billionaire doesn't come and try it on and try cornering the silver market, because there's so little physical out there. If they were to just go out there and start buying the 1,000-ounce bars bulk, a billionaire, and insist that they want the real physical and delivered in the 1,000-ounce bars, they could clean out the market. You know, it's of course they would shoot the price up is the immediate knee-jerk reaction, but ultimately they could really, you know, it's such a vulnerable market. Now let's take a look at the Dow Jones Industrial Average. 25,400 today, and she's up 93 points right now while we're speaking. There's talk about the U.S. trade deals being there's a deal on trade where they're going to talk about these tariffs that they've been putting in on trade. They're going to talk about coming together at the table, China and the United States, and they're going to have talks. And this is the thing that's stimulating the market up 100 points. Yeah, I could buy that more or less, you know. Let's take a look at crude oil, down at $1. It was over $70 yesterday. Now it's $69.05 for sweet light crude, down $1.08, 1.54%. So it had an up day, but she's got a down day. Now let's take a look at bonds and rates. We've got the bonds all coming down today a little bit. They were going up yesterday. This market's perplexing me, to tell you the truth, this bond market. I expected yields to be up by now, but we've got big buyers, and the buyers are in the banks. If they keep up this action of negating the effect of the quantitative tightening, the economy could overheat, and we could quite literally start to see tremendous inflation start to come right around the corner if this continues. If they continue with this. If they let up on this, the bond yields will shoot up to the moon, and we're going to get a deflation. Right now, the economy there's a lot of pressure there. There's a lot of tension. And the tension is what's causing it to want to flip, either one way or the other, this tension. It's kind of like a coiled spring. It's under a lot of tension. And this is what's causing it to want to flip. Kind of what it's like is picture a tightrope walker in your mind. He's walking a tightrope. And what normally balances a tightrope walker is that big long pole he has, you know. Well, picture he loses his pole. He's on a tightrope, and a wind is starting to come up, right? Now, he's trying to balance up there. And this is what the economy's trying to do. It's trying to balance, but the pressure of all of this credit is like the wind hitting the tightrope walker. So he's going to fall in one of two directions. One direction, if he falls to the right, that's inflation. If he falls to the left, that's deflation. And so at this point, the guy's struggling to stay on the line. We see the wind's picking up. He's trying to balance himself on the line. We know he's going to fall. The wind's going to blow him off. It's just simple. Simple. For an economist, it's simple. We can see that he's going to fall. The question is which direction is he going to fall in? Is he going to fall into the right or fall to the left? Inflation or deflation? And that's the balancing act that's going on right now. And the Fed is the ones in control over this balancing act. They're the force that is, and they're using the banks right now. I mean, it would be a simple calculation to say, hey, you know what? We're going to have a deflation. If the banks have not been buying these bonds and keeping the bond yields suppressed, you keep these bond yields suppressed, it's going to move us toward inflation. And so we're going to have to watch this very carefully and see what happens with it. It's a story that's not over yet, basically what I'm trying to say. And we're watching it to see which way it's going to go. We're watching these bond yields, especially the U.S. 10-year, like a hawk. Okay, so now the U.S. dollar index today, 94.47. And this is basically where it's been for a little while now, 94.47. In around this range, 94, 95. It's been here for a little while now. And we're going to keep our eye on it too, but it's not been moving much lately. Now, what do we got here? We're going to talk about we're going to talk for just a minute about Greek and their debt. Now, the euro has tumbled today because the IMF has warned on the Greek debt and the sustainability of this Greek debt. Here's the thing. The European Central Bank has been carrying the Greek debt for a reason. Because without the Greek debt, and without the Greek debt burden of a country that's never going to pay them back, let's face it, let's live in the real world. In the real world, Greek's never going to pay the European Union back the debt. But that's a credit to the European Central Bank of over 300 billion euros. Credit to the European Central Bank. They can't come up with on their own, they cannot come up with 300 billion euros. So that money that Greece owes the European Central Bank is counted as a credit. In other words, they count it as they're going to get the money back with interest, and they count all of that as a credit to their bank. So that's part of their capital of the European Central Bank. If you were to haul that 300 billion, or way over 300 billion euros out of the European Central Bank, the European Central Bank itself would be defunct. It would be, they can't do that. So they don't have any choice. They got to keep that debt going to Greece. So how they're going to do that is Greece don't have the money to pay them back. We'll give Greece the money to pay us back. As we give Greece the money in another loan, we give Greece another loan to pay us back. So we hand Greece 10 billion more euros, and then Greece hands it right back across the table to us as a debt payment. So basically, they are monetizing Greece's debt payments and keeping Greece going. That way. They're desperate to keep Greece going because if Greece pulls out, then they're going to cause a giant hole. It's kind of like this. If you went to the dentist and the dentist says, I'm going to pull those 3 teeth, then they're big molars you got in the back there. He says, I'm going to pull those 3 teeth. And you'd say, what am I going to chew on? And that's the way with the European Central Bank. If Greece pulls out and says, okay, we're never paying you back, we're going defunct, we're going bankrupt, Greece is going bankrupt, then the European Central Bank's going to have to make good for that money that Greece is going to pay them back, and they can't. They can't. So they got to keep Greece going to keep the European Central Bank going. And so, of course, the euro is going to tumble as the IMF, the International Monetary Fund, warns that on Greek debt sustainability. In other words, the Greek debt is not sustainable. It's growing too big, too fast, and they can never pay the money back. And this is going to adversely affect the European Central Bank. It could take the whole Eurozone down, to tell you the truth, honestly. It says here, IMF mission chief for Greece, Peter Dolman, told reporters in a conference this morning that Greece's cash buffer will raise to euro 24 billion as a result of debt relief measures agreed by the euro finance ministers in June, but that amount is set to drop in half by euro 12 billion by the end of 2022. Translating the IMF's newspeak, it's explaining that without more generous debt relief measures, Greece could struggle to maintain market access over the long run. The fund said in its last economic assessment of the country before the end of its bailout on August 20th. It says the fund's calculation finds Greece's debt costs will begin an uninterrupted rise after 2038, costing around 20% of the country's GDP every year. It says, while the world assumes that Greece was fixed, it apparently is not. Surprised? And the Euro USD is dropping on the news. Okay? So the Euro is losing steam against the US dollar on the news. Anyway, listen, thank you guys for listening. This has been your market report, and we will catch you again tomorrow. Bye-bye for now, guys.